Okay, but yeah, go ahead. That's what this session is for, is question and answers.
Good.
So, go
So
ahead.
Dr. Aderemi, thank you so much for all the training and everything. As I mentioned, maybe I didn't mention, but I've started with Hargreaves Lansdowne.
Okay.
However, maybe I didn't get it right. Someone was telling me I didn't listen to what you were saying with regards to the long-term investment. So I did the ones you taught us.
Which one?
The two that you taught us. The let me just log in and just get it. H. Hargreaves. I'll just get the name now.
Are you talking about the index funds?
Yes, the funds, the index fund, the exact two that the UK accumulation
and US.
Yes.
Okay.
So, and well, I did those ones. I think I now did something a little bit silly. And the person got angry that I'm not listening to what I was taught.
Who is getting angry with you?
They need to get angry at this age. Nothing. So yes, I did the Daniel, I'm on the phone. I don't know where the remote is. So I did the Fidelity Index UK and the Fidelity Index US.
Okay.
Those ones are the main one that I did. But you know, I was being adventurous. I now did the UBS S&P 500 index.
Okay.
I also did the Vanguard FTSE UK All Share Index.
There's nothing wrong with that.
Yes, but so I thought I did something, whatever. So those ones, I just did them because the Vanguard one was from Warren Buffett. I looked at some of the things he invested in. I thought if Warren Buffett have a stake in this one, nothing will happen to him. So, excuse me, sir, you know what I mean. He's done all the work. Me, I just put small 20 pounds, you know. But apparently, the UBS index one is just something that I saw, and I like what's his name, whatever, the guy that ran the organization for a while. I just liked him, and you know, and it was cheap, so I did it. Okay. But that one, since I bought it, it has been losing money. So
which one is that?
The UBS S&P 500 index.
Let's see, UBS S&P 500 index. Okay, let's see. Okay. Number one, you have to remember you're doing it long term. So you're not expecting to be worried about what happens over a few short weeks or short months. But looking at the UBS, obviously, as you know, the S&P 500 index is tracking the top 500 companies in the US. Yeah. And you can see the returns over the last 5 years, which has been pretty good.
Yeah.
So there's nothing wrong. There's nothing wrong with the UBS S&P 500 because you're tracking the.
I just put. To be honest, I just put £100 and I will leave it just to be accumulating and just close my eyes.
Exactly.
Because
that's the way to do it.
They've abused me very well, so I won't add anything on it.
But let me see the Warren Buffett one. The Vanguard. What is that?
Is the Vanguard FTSE UK All Share Index. I looked at Warren Buffett's portfolio and I saw this particular shares in one of his portfolio, and I thought, if Baba can invest in this one, let me to put my money. It won't go down. You know, as in.
Was it just one stock you saw that you then did the whole thing?
Yes.
So which one did you do? This All Share Index? Yeah.
Let me just. Yes. Vanguard FTSE UK All Share Index.
Okay.
I saw it. Yeah. Yeah.
Oh, that's my website. Let me try it again. Vanguard. There we go. So that's the All Share Index. So So obviously that one is tracking most of the shares on the FTSE.
Yeah.
So again, so you can see here.
It's okay. This one is this one is relatively stable, so it's this one is
the
just the
sector,
PS one that is
it's UK all companies. But I think that's the good thing about the financial markets and investing. The good thing about the financial markets as investing is actually that's why I was laughing when you mentioned you just you just took Warren Buffett's.
You said something the other day. You said you cannot reinvent the wheel. Why not join them? And
well, this is
yeah,
true. But yeah, the key is making sure there's a rationale behind your decision making, because that's the good thing about investing. There's no right or wrong answers.
Yeah.
There are no right or wrong answers, and we're all different individuals with different risk appetite, different personalities. But the key is, so long as you're not just making decisions where you have no clue what you're doing, that's the key.
Yeah.
So if you're invested in, just like you said, you know what this Vanguard All Share Index is tracking, the index is tracking, you know what the S&P 500 is tracking, you know what you're investing in, and you've chosen to invest in that, that's fine.
Yeah. Okay. At least somebody sees. It makes sense. My second question.
Before I go to your second question, the only thing I'm worried about that people do is when they just invest in something because other people are investing in it, that they have no idea what's going on. So for example, now you might just say, okay, you've heard of, maybe somebody told you that, Joel, there's this fund that invests in Afghanistan.
Baba, sorry, Doki, even if I have the money and it's on the floor, I'm not that kind of person that will invest in that kind of thing.
Exactly. So that's just the key. So long as you're doing what
that one gone are the days. Because I'm doing it. No way.
Exactly. That's the key.
No,
exactly. Well done. Okay, what's the other question?
Yeah. So the second question, sir, has to do with the performance.
Yes.
The performance that we see when, like the one I'm looking at now, that performance,
Yeah.
When you were explaining let me, I want to make sure I get. Sorry.
It must be the dollar cost average.
No, yeah, no. When you were explaining the Fidelity Index UK accumulation class P, when you were explaining it to us, you showed us your screen.
Yeah.
And I remember seeing the performance.
Yeah.
Then when I think Kashokwe or Koshokwe, I can't remember his name. When the guy that opened his account, when he opened it, you showed us his screen, and I saw his performance. When I did mine, I also looked at the performance and I compared the three performance, and I noticed that they are different. So I wanted to ask, is it that is HL, how will I put it? Are they telling us the truth with regards to the performance? I'm just asking, because I compared the three performances and it's
okay. Let me put it this way. The
annual return over the years. If you look at it, you see that they are different.
Yeah, but I think it's more academic.
Oh, okay.
When I say academic, I'll show you. Probably it's probably better I use my trading platform.
Can you tell mommy to help you, please?
I'll use the trading platform. So if you look at this is the FTSE, for example.
Yeah.
So this is the FTSE since March last year.
Okay.
And this is you can see the US stock market since March last year.
Okay.
So bottom line is so for example, your S&P 500 or your US Fidelity Index.
Yeah.
What it's doing is tracking this market.
Okay.
So again, that's actually the good thing, you have different ones. So it doesn't matter whether you're using Vanguard, whether you're using UBS, whether you're using Fidelity.
Okay.
if it's an US index you're investing in, this is what they're tracking, and is this performance they're following. So,
okay, but I'm thinking the performance
yes.
for example, the performance in I just want to quickly say something, and I want to get it right. For example, the performance in 2016, 2017 on my screen, on your screen, on Koshakwe's screen, they should be the same.
There should be, but sometimes there might be errors there. But like I said, I wouldn't worry too much about that, because number one, they're historical returns, so they're from the past.
Yeah,
so,
they are from the past, but at least they should reflect the
oh yeah,
correct.
there should be.
Yeah,
But
that
like I
was what I
said,
was thinking
I
about.
won't
Yeah.
worry too much about that. I mean,
Okay,
that's
cool.
actually why I'm showing you this chart, because at the end of the day, the key is what they're. So okay, let's use it the other way around. So if the U.S. market returned, let's say, for example, you started investing here in March, yeah, and you were investing in index fund in March, and it returned, let's say, 50% over this period, and you were investing in that.
Yeah.
Then you can't cheat, because that is what everybody knows. This is the global market. You can't hide the return of the US market. It's there for everybody to see. It's returned 15%.
Yeah.
Now, if your own fund, it might return maybe 48, 49, 50, that kind of around there, maybe plus or 2% margin.
Average, yeah.
Now, if it's returning 50% and yours return 10%, that's a huge difference. There's a big problem. Then, in fact, that is where you now say, okay, there's a serious problem.
Something is going on, yeah.
This fund manager. So maybe you now say, okay, Vanguard is not tracking this index very well, or Fidelity is not tracking this index very well, or UBS is not tracking this index. If there's such a huge difference between the actual return of the stock market and the return you're getting in that fund. So that's the key. But yeah, sometimes there's 2 or 3%
plus or minus.
The difference. So that's why I said I wouldn't worry too much about that.
Okay, cool.
If there's a huge difference, that's a big problem. And again, actually, that's a good reason why you also want to use. In fact, it's a good thing you brought up that question, because this is why you want to get a reputable fund manager to buy the index fund. I mean, Vanguard is reputable, UBS is reputable, Fidelity is reputable, because of exactly what you've just said, Joel. Because, when you invest in a Vanguard US index fund, you're relying on the fact that the Vanguard fund managers know how to track the US index well. But you're now relying on their reputation and their experience. Same with Fidelity. So if you invest in a Fidelity index fund, you're relying on the fact that those Fidelity fund managers are experienced in closely tracking the index. Okay. So if you now go and get one obscure company, maybe Mr. Smith index fund, maybe he just started tracking index last week. So he might then have a problem that he might not track it closely. He might be making mistakes. So that's actually another reason why you want to make sure you're using reputable investment house that have experience doing these things. Okay. So that's where the danger is, that you might get a huge difference if it's someone that doesn't know what they're doing. So yeah, that's another reason why you want reputable companies, and don't just pick any company to buy the index funds. You want a reputable company.
Okay. Cool. Thank you.
Pleasure.
I think that's it for me. For me, it's about the funds. I'm sorry I don't have the strength for all the other types. So it's just those two. It's
but
just
again,
those,
that's the
1, 2,
beauty
3, 4.
about that's the beauty about investing, because again, I always want people that investing is a personal thing. You're not in a competition or in a race with anyone. I know some people who they don't invest in anything other than the UK, US index fund, and that's it. They don't buy stocks and shares, they don't buy ETFs. They just know that, look, I already have enough exposure with the UK index and the US index. They're happy with that, and that's what they do. Yeah. So again, you don't have to, you do what you're comfortable with. It's your money. So
yeah. And like not that anything is gonna happen, but nobody knows tomorrow.
Exactly. Exactly. So,
But yeah,
and because of that, that's why it's important that you, and that's why I love investing, because it's a very personal thing and we're all different. And you always have to assess your risk appetite first. What are you comfortably risking? What are you comfortably investing in? Are you someone that you don't mind taking risk and losing money, or are you someone that you're more conservative? You just want to take the minimal risk possible. So yeah, all these things. That's why you never find two investors doing the same thing. And again, it goes back to what we said in the beginning. That's why you have to be careful. You don't just copy people, because your risk appetite, your investment objective might be completely different from the person you're trying to copy, who might just be willing to risk things and take risk and lose money, though they don't mind losing money, and you're following them. So yeah, do what you're comfortable with.
yeah, cool. It's, yeah. I think that's it from me.
Okay.
I'm not sure if anybody else have questions, but
Tayo, do you have a question, Tayo?
Not particularly, no. I just felt I'll sign in to see and learn.
Yeah, you're welcome.
Questions.
You're welcome. Actually, what I'll do while we're waiting for others to join, and if you think of any question, I'm going to log into my account. I'll log into my account, because the other thing about investing is trying to see when to adjust your portfolio, what to do. Obviously, the course spent a lot of time in how you analyze index funds, ETFs, how you analyze stocks, how you analyze countries, industries, and the decision making to buy. But once you bought the stock or bought the fund or bought the ETF, the next question is, okay, when do I sell it? How long do I hold on for it for? How do I monitor it? So I think I'll just cover some of that, because number one, you don't need to check your investment account every week or every month. Every couple of months is fine. I tend to check mine every couple of months. It tends to be during when I'm doing courses, I check it. And in between that, I don't check it. So I'll only check it every couple of months. And then when I check my investment account, what I'm trying to see is, because like I say, if I buy stocks, if I'm losing 50% of my investment, I'm going to sell it. So that's all the things I'm looking for. Do I have any stocks where I'm almost down to a 50% loss, then I want to sell it. And then also I'm looking at when it gets to 100%, do I want to sell it 100% gain with stocks? I'm talking about specifically stocks now. So with stocks, if I get to 100% too, I also want to check to see, okay, is the company still doing well? Is the market conditions right? Whether I should leave that stock to just run, or do I sell it? So those are the sort of things I'm looking at. Obviously, with index funds, I just leave them alone. Index funds, as we know, I'm just going to just be doing my dollar cost averaging, invest in them until I retire and start to cash out. So with index funds, they don't need monitoring. With index funds, I just leave those ones alone. But the ones I keep an eye on are mainly the stocks I buy. So let me do that. I'll just pause the screen while I log into my account. And I might be quiet while I'm typing in my login details. And I'm on to the next page. Oops. Now let's see, second. Almost there. Okay. Okay. Right, I'm in my account. Okay. All right, so We'll just go through some of them. So for example, look, you got Ashted Group, where I'm up 206%. Let me note Ashted Group, bring up a notepad. So Ashted Group. So that's up 206% at the moment. So I need to see, is that company still performing well? Should I just cash in on this stock before it starts to fall? So I'm going to check that. We'll do that together. Aviva is just up 64%, so it hasn't reached the 100% mark, so I leave it alone. BAE System is just up 2%. This is an ETF, which I treat like stocks. So ETFs I also treat like stocks. It's tracking the biotech sector, is down 0.3%. Again, if I'm not down 50%, I leave alone. So since it's not down 50%, I don't need to worry about that. You can see the BT group is up 53%. So again, I'll leave it alone. So if once they're not up to 100% or they're not down 50%, I don't need to do anything about them. So you can see this is down 11%, but it's not 50, so that's fine. This is down 8%. Then you can see Glencore is up 154%, so that one has gone past the 100% mark. So I need to see if it's still doing okay, if I still need to leave it alone or do I need to cash it in. So that's Glencore. So Glencore is 154%, 154. And I know you're getting the picture. So this is just 5%, this is 47, this is down 16%. It's an ETF tracking Indonesia. It's not down 50%, so I leave it alone. So I think you're getting the picture. So what I'll do is that, when I'm looking at my portfolio, especially for stocks and shares and ETFs, what I'm looking for is to see if I'm losing up to 50% of my investment. If I am, I'm going to just cut my losses and sell it with a 50% loss. But if it's not down 50%, this is long-term investing, I'll leave it alone. And if it's not up to 100%, I also leave it alone. But once it gets to 100%, I start to check to see whether I need to sell it or leave it alone. And the decision to sell or leave alone will depend on how well the company is doing and the market condition. So let me just log out. We're going to do that. So let's go back to shares. So let's start with Ashted Group. Ashted. So we can now see with the Ashted Group, you can see on the chart, their stock share has just been going up. So you can see it's still doing very well. So that looks good. It's been going, that's why it's obviously gone up 206% since I bought it last year. But you can see from the chart that it's doing very well. But also what you want to do is go to news, see if there's anything in the news about the company that you've invested in that is doing well. Obviously, what you want to make sure there's no bad news about the company. So this is one way you can find out news about the share you bought. It says JP Morgan high target on Ashted points to potential for substantial outsized growth. So even the markets are saying there's a good chance of the company to grow even further. So this is where you can just check information about the company to see if they're still doing okay, no bad news, things are still moving on well. So if everything else looks okay, I'll leave it alone and just keep benefiting from it. The other way you can do that is Google. So if you go to Google Ashted Group, if you just Google the company and you go to news, Now you can see what's, recent news about the company. You can see they're all 1 hour old, 1 hour ago, 1 day ago. So you just Google the company, go to news, you can find up-to-date news about the company to see, if there's everything is going well. Basically, what you're looking for is to see if it's positive news about the company and there are no major negative news. Because if, for example, a company I know that's not doing very well is, let's say, American Airlines. Let's go to American Airlines. So you can see when you go to American Airlines news, you can see the stocks fall on Monday, they're underperforming. Obviously, we know the airline industry is suffering now with the COVID. So, you want to just keep an eye on this. This is how you just have an idea of what's going on with the company you're interested in and whether you should cash in on your profit or to leave it alone. If it's all positive news about the company, then you leave it alone. So let me check. The other one is Glencore. So, so we see Glencore 2, you can see with the chart, it's been on the upward trajectory. Glencore is a commodities company. So again, the other thing you could check is the news. And obviously the global economy is slowly recovering from the COVID crisis. Things are not as bad as the height of the pandemic. I mean, things are still not good, but they're not as bad as the height of the pandemic. The economies are slowly opening. So, everything looks okay. So again, you can check for news under the news section on Hargreaves Lansdowne, or again, you can go to Google as to Glencore. Oops, sorry, I went to images, news. So again, Glencore brings tort claim against Colombia. Oh, why are they suing Colombia? So Glencore leads Cobalt blockchain pilot scheme. World's largest mining firm, Glencore, pilots blockchain Cobalt. So that's a good thing. Glencore to resume production at Congo's port. So again, so long as you're not seeing anything hugely negative about the company and you're seeing a lot of positive things, that would just encourage me to leave those stocks alone and just continue to profit from them. So again, I'll just highlight that in terms of what you're sort of looking for when you're monitoring your portfolio, checking your portfolio, is just to see if you need to sell things, if you need to do any adjustments, but most importantly, you don't need to do it on a weekly or monthly basis. Every couple of months is fine. And like I said, with index funds, you just leave them alone. Okay, any questions? So this is mostly a question and answer session. So if there are no questions, I'll let you guys go and enjoy your evening. At least we've satisfied Joel's questions. And all the best.
Yes, sir, you did.
And all the best.
Because I started feeling really bad,
You shouldn't.
Yeah, so, but at least, with your explanation, it kind of makes sense. So,
yeah, you're doing a good job.
Well, not yet, but
you are. You're already invested, and you chose your funds wisely, and you had a reason for choosing them. That's the best. That's what you should be doing, and you did that. You are not investing in Afghanistan fund because your friend told you to. So.
after paying to come on your course, I will go and invest in Afghanistan. Even if I tell you, I'm sure you will come and find me and beat me because you don't share.
Okay, well, all the best.
Well, thank God. Thank you, sir. Thank you so much. Thank you.
Pleasure.
Take it easy.
Okay. Okay, so Tayo, Joel, if there are no questions, I wish you all a good evening. Happy investing.
Thank you.
Pleasure, Tayo. And obviously, you can always ask questions on the platform in between these sessions if you have any questions along the way.
Yeah,
Sure.
definitely.
Thank you.
Thank you so much.
All
Thank you.
right. Take care. Have a good
Bye.
evening.
Bye, sir. Bye.